is worth paying attention to what's going on with this support level at the 20-day moving average. If we do take that out, the 50-day moving average becomes the next logical target. That's currently sitting right around 54.30 on the S&P 500 at the moment. All right, let's talk about what you need to know before the bell this morning. Google reported earnings yesterday. Actually, earnings beat pretty much across the board. Earnings and revenues beat across the board. One little glitch in the matrix for Google yesterday was slightly lower revenue for YouTube, which was up $1 billion on a year-over-year basis, but less than expected. So the stock's going to be a little bit weak this morning. Tesla also reported earnings, kind of missed expectations on several different points. That stock's going to be down about 7% this morning, but it's had a huge run here lately. So, not really surprising you're seeing a bit of pullback. Again, the whole market's just kind of going through this rotational move right now. Stocks have gotten very far ahead of themselves, and we're kind of going through this correction process. As we talked a little bit about yesterday, the market did correct. We broke the 20-day moving average. We rallied back above it, held it yesterday. So today will be important that the market, if we do break below it. Now this morning, futures are pointing lower, particularly on the NASDAQ because of Google and Tesla. So we'll see what happens. But if this market closes below the 20-day moving average, it'll be important that tomorrow we get back above it. We're kind of flirting with that support right now. Again, nothing overly concerning at the moment, but it is worth paying attention to what's going on with this support level at the 20-day moving average. If we do take that out, the 50-day moving average becomes the next logical target. That's currently sitting right around about 54.30 on the S&P 500 at the moment. So again, not a huge drop lower, but certainly we could be going through a bit more of a correction process. And again, we've been talking about the need for a correction here for a while. So again, this isn't anything. This isn't the end of the bull market. This isn't anything crazy. It's just that we've had a very long bullish trend here. And we're due for a 3 to 5% correction at least, just to work off some of that kind of more overbought extended condition. We're still on a sell signal. That hasn't changed. That's going to put pressure on the market here near term. So again, as we talked about before, continue just to kind of monitor your portfolio risk as needed. Don't take a lot of aggressive bets right now. We reduced exposure to a lot of these big mega cap stocks last week. So, now we're just kind of hanging out with a little bit of extra cash, looking for wherever the next opportunity is going to be. And we'll see how this works out over the next few days. But again, it's very unlikely, right, despite a lot of the headlines, that the end of the AI trade is here and large caps are going to continue just to massively underperform. They're due for a correction, absolutely. But again, take a look at Google's earnings in particular yesterday. Big increases in their earnings overall. Their revenue was higher than expected. Those stocks are where the bulk of earnings growth is coming from. It's not coming from the bottom 490 stocks for the most part. It's mostly from those top 10 stocks that are generating the big bulk of earnings. And we're about to get into a lot of those. The buyback window, which is in blackout right now, right? We have no buybacks going on at the moment. Another reason we kind of have this pressure right now in the markets because the biggest buyers of stocks aren't buying stocks at the moment. That blackout window is going to be opened by about 50% next week. And then by the time we get another week or so out, it'll be back to 100% open. So buybacks are set to start coming back here, after we get through next week for the most part. Buybacks will start coming back into the play. That'll help give some support to the markets here near term. So again, just be careful of narratives. This is always the case. Just manage your risk accordingly. Take some profits, rebalance as you need. But don't take on a lot of really aggressive bets. We're seeing a lot of short covering in meme stocks and small cap stocks in particular. That tends to be a little bit of a risky trade. So be careful what you're chasing and make sure you know what you own. Doesn't mean that all stocks are bad. Just be careful you know what you own and you're not just chasing particularly temporary move in the market caused by a short-term rotation on a technical basis. So that's what you need to know before the bell this morning.